Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In the previous class, we have solved some problems on different methods of treatment of goodwill, and then we have solved problem relating to the adjustment of capitals. Now I will solve a problem that is on adjustment of capitals again. Page number 44, problem number 15. Let me read the problem, and in the meantime let us analyze it and we will solve the problem now. Page number 44, problem number 15. Ganga and Yamuna are partners in a firm. Following is their balance sheet. Balance sheet is given: creditors, bills payable, normal liabilities, capitals, that is capital balances, opening balances are given. Then we have to do adjustment to this capital balance. This by balance brought down on the credit side of partners capital account. Then cash in hand is there, stock, debtors, there is a provision. Furniture, patents. What is patent? Patent is an intangible asset like goodwill. It is copyright or the ownership of some technology maybe, or design, shape, whatever it is. That is called patent, which is like goodwill, intangible asset. So treat it at par with other assets. Plant and machinery, land and buildings. Remember, assets are jumbled here. Patent should come at the end because it is an intangible asset. Remember. Let us move on to the next part, that is adjustments. Kaveri is admitted on 1st April 2017 into partnership on the following terms. Terms are: Kaveri should bring 13,000 as capital. Cash in hand is given. There is no cash at bank, so we have to give all cash entries, not bank entries. Remember, goodwill of the firm is valued at rupees 6,000. So this is third method of treatment of goodwill. That is, goodwill should be created, should be credited to old partners in their old ratio. Goodwill accredited to old partners capital account. That is a journal entry. Provision for, and goodwill will appear in the balance sheet. Goodwill will appear in the balance sheet, new balance sheet it will appear. Provision for doubtful debts is to be increased by rupees 1,200. By means this is the amount that should be entered on the debit side of revaluation account, because when provision is increased against debtors, the debtor value will decrease. Correct. So decrease in the value of asset is a loss to the business, should be entered on the debit side of revaluation account, and in the new balance sheet we have to deduct 1,200 plus old provision 500. So 1,700 should be deducted from the debtors in the new balance sheet. Then patents and machinery are to be reduced by 20%. That means patents should be reduced by 20%. Decrease in the value of an intangible asset is a loss again, should be debited to revaluation account and should be deducted from the patents in the new balance sheet. And rupees 2,000 on machinery. So depreciation on machinery, again a loss, decrease in the value of an asset, should be debited to revaluation account, entered on the debit side of revaluation account, and should be entered on the credit side of, on the asset side of balance sheet, that is machinery, inner column, less depreciation, net amount should be written in the outer column. Land and buildings are to be increased by rupees 4,000. By means this is the amount that should be entered in revaluation account as there is increase in the value of an asset. Land and building is an asset. So it should be entered on the credit side of revaluation account and should be added to land and buildings in the new balance sheet. Then capital accounts of partners are to be adjusted in their new profit sharing ratio of 3:2:1 based on Kaveri's capital. So Kaveri's capital, how much it is? 13,000. For how much share? 1/6. 3 plus 2 plus 1, 6 denominator. So 1/6. For 1/6 share, Kaveri brings in 13,000 capital. So what we have to do is we have to calculate the total capital of the firm, that is 6/1 into 13,000. We will get the total capital of the firm, then divide it among all the partners in their new profit sharing ratio. Adjustments are to be made in cash. So we have to carry down the balance, to balance carried down, then we have to finalize on the credit side by cash deficit brought in, on the debit side to cash excess paid. That's what we have to do. We have to see which side is greater and shorter side should be written as to cash or by cash, remember. Then we have to adjust it in the cash balance and then new amount, that is a fresh amount, should be shown in the balance sheet. That is what we have to do here. So let us solve the problem. Revaluation account, draw the columns. Revaluation account. Draw the columns. Yes. Debit credit, write column headings. Particulars, amount in rupees. Particulars, amount in rupees. I am not writing it, just write debit credit and column headings. Now let us solve the problem. There is appreciation in the value of land and buildings by land and buildings account. By land and buildings account. Buildings account appreciation. Appreciation, how much? Whether amount is given or a percentage is given. Increased by 4,000. So straight away amount is given, no need to calculate. 4,000. Write it. Then on the debit side, to provision for doubtful debts account. To provision for doubtful debts account. PDD. Provision for doubtful debts account. Debts account. Provision for doubtful debts account. How much it is? 1,200. 1,200 given in the problem by rupees 1,200, I think. Yes, it is. Increased by rupees 1,200. Then patents reduced. Patents, don't write depreciation. It is an intangible asset. So write decrease. Patents decrease. That is 4,000 into 20%. 4,000 into 20%. 800 rupees. 800 rupees. Then there is depreciation on machinery. To machinery account. Machinery account, depreciation. Depreciation. What is the percentage? Depreciation on machinery. It is given as 2000. There is no percentage. Straight away 2000 rupees amount is given. That's all. No other entries. Close revaluation account. Find whether there is profit or loss. Yes, 4000. Credit side total is 4000. See the debit side, it is also 4000, right? Debit side total and credit side total both are equal. Now what will you do? I told in my previous class, if such situation arise, then what we have to do? I gave the solution also there. I told you how to tackle in that way during that time. Nothing to do. Simply write the total and keep quiet. That's all. Because there is no profit, no loss. No question of transferring anything to partners' capital accounts because there is zero balance, zero profit, zero loss, isn't it? So just do the total of revaluation account and keep it as it is. No entry in capital account regarding revaluation account, revaluation profit or loss. That's all. Now let us move on to the second part, combined capital accounts. Combined capital accounts of partners. Accounts of partners. Combined capital accounts of partners. Let us draw. Yes, that's all. Combined capital accounts. Write the names with rupees, debit, credit, column headings, particulars, then partners' names, Ganga, Yamuna and Kaveri, right? Ganga, write in full, Yamuna, Kaveri. And Kaveri. Yes. Ganga's capital account and Yamuna's capital account balance is given. Refer old balance sheet. Capital balance is given by balance brought down. By balance brought down. Write the capital balances. How much? 40 and 20, right? 40,000, 20,000, 20,000. No balance in Kaveri's capital account. Then capital introduced by the new partner Kaveri, that is cash brought in by new partner towards capital 13,000. When new partner brings in cash towards capital, cash accounted to new partner's capital. So new partner's capital account is credited by cash account. Capital introduced. Capital introduced. Introduced how much? 13,000, right? Yes, enter it. Then goodwill should be created. Goodwill is how much? 6,000 rupees goodwill of the firm. So we have to create goodwill by debiting goodwill account and crediting old partner's capital account. By goodwill account. By goodwill account. Goodwill account created. How much? What is the ratio? Old ratio was no ratio given. Old ratio is not given in the problem. In that case, what will you do? You will take it as equal. 1:1, remember. Old ratio 1:1. So goodwill amount is 6,000. So 3,000 each. Give credit to old partners. So when the ratio is not given in the problem, don't get confused thinking that ratio is not given, problem cannot be solved. No, you have to immediately assume that the partners were sharing the profits and losses in the ratio of 1:1. That's equal proportions, 1/2 and 1/2. Whatever, that is what we did here. Goodwill is created. Then what next step? Yes. Then are there any other entries? No, there are no other entries. So you have to close capital account, right? Close capital account, but what you have to do is you have to calculate the capital of the partners in the new firm. How to calculate capital? Share of new partner. Share of, what is the name of new partner? Kaveri. Share of Kaveri is 1/6. And capital of Kaveri. Capital of Kaveri. How much? Rupees 13,000, right? 13,000. Therefore, total capital of the firm is equal to how much? 6/1 into 13,000. So it will be how much? Is equal to rupees 78,000. 78,000. Now, what you have to do is you have to share it among the partners. Share it among the partners. I will distribute here itself. This is first part. This is second part. This is the given information in the problem. This is what we have calculated, the total capital of the firm. Now we have to distribute it among the partners. Therefore, capital of Ganga in new firm is equal to 78,000. 78,000 into her new ratio. It is given as 3 to 1, 3 plus 2 plus 1, 6. So 3/6, right? 3/6 is equal to rupees how much? Rupees 39,000. 39,000. Yes, 78,000. So 39,000. Then share of, that is capital of Yamuna in new firm is equal to 78,000 into 2/6 is equal to rupees how much? It is 26,000. 26,000. And share of Kaveri. Share of Kaveri in new firm is equal to rupees 78,000 into 1/6 is equal to rupees 13,000. 13,000. 13,000. That's all. Now, we have calculated how much capital should be there in the new firm. Let me write it here. We will bring down the balance first. That is, to balance carried down. To balance carried down. This is not the balancing figure. Remember, this is not the balancing figure. Give note number 1 to this. Note number 1. And write here note number 1. How you have arrived at? That is note number 1 explains this. Very simple. So write this amount, balances 39,000, 26,000 and 13,000. 13,000. Then, now balance the account. That's all. No other entries. Balance the account. Leave one line gap. There may be surplus or deficit. So, you have to pass entry for that. So, leave one line gap on either side. Now balance. New partner, no problem at all. 13,000 on either side. So, no problem. What about the second partner, Yamuna? 23,000 on the credit side, 26,000 on the debit side. So, write the total of higher side first, write the same total on the other side, 26,000. Difference is how much? 3,000. This is nothing but shortage of capital in Yamuna's capital account. In Yamuna's capital account, there must be 26,000. But there is only 23,000, 20 plus 3, 23,000. So, we have to make sure that she should bring 3,000 rupees to make good that is shortage, to maintain the capital of rupees 26,000. So, by cash account, deficit brought in, deficit brought in, deficit brought in right there. That's all. Refer the other partner, Ganga. On the debit side, 39,000. On the credit side, how much? 43,000. So, credit side is greater. Write the total of credit side first. 43,000. Write the same total on the other side. 43. Here, what is the difference? 4,000 is the difference. 4,000 is the difference. So, write there to cash account. To cash account. Cash account. Excess amount paid. Excess paid. This is balancing figure. Remember, friends. This is balancing figure and not your to balance carried down. Here also write balancing figure. Now what you have to do? You have to bring down the balance. Correct. So, by balance brought down. By balance brought down, write the same amount which was carried down, 39,000, then 26,000 and 13,000. This is how you have to prepare capital account. Your capital account is over. Now let us move on to the last part, that is balance sheet. Let us prepare balance sheet here. Balance sheet as on balance sheet of Ganga, Yamuna and Kaveri. Write in full. I am writing in short form. Don't use short forms in board exam. As on April 1st, 2000. See the date, 2017, right? Yes, it is 2017. 2017. So, liabilities side, asset side, write liabilities amount in rupees, assets amount in rupees. Don't write debit credit, it is a statement, it is not an account at all. Remember. So, balance sheet, cash in hand, start with the cash balance, cash in hand, write within bracket, write opening balance first, 7,000, 7,000 plus cash brought in by new partner towards capital, 13,000. Goodwill is not brought in the form of cash, it is created. But there is a shortage brought in, deficit brought in 3,000 and excess paid 4,000. So, plus 3,000 brought in by Yamuna, and last one is minus excess amount paid to Ganga, that is how much? 4,000. It is 4,000. So 7,000 plus 13,000 plus 3,000 minus 4,000, that is your cash balance. It will be 19,000. 19,000. Cash balance is 19,000. Then next asset is stock. Stock. Are there any adjustments? No, straight away 15,000 in outer column. Then debtors, I think there is an adjustment. Yes, it is. So inner column 16,000. 16,000 minus PDD, provision for doubtful debts. How much? 1,700. 1,700. That is, already we have shown in revaluation account 1,200 plus 500. 1,200 plus 500 right here. So that there will be clarity. 1,700. So it will be 14,300. 14,300. Then what else? Furniture 4,500. Furniture 4,500. Then what? Plant and machinery. Plant and machinery. Plant and machinery. How much? 18,000 minus depreciation. Inner column less depreciation. 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 How much it is? 2,000. 2,000. Percentage is not given. Straight away amount is given, right? Plant and machinery. Yes. 2,000. Straight away it is given. So 16,000. 16,000. Land and buildings. Land and buildings. Land and buildings. 20,000. 20,000. Add appreciation. Appreciation. Appreciation at the rate of 20%. Appreciation at the rate of 20%. So 4,000 it will be. So 24,000. 24,000. Then patents. Patents. I think there is a change in patents. Yes, it is. There is a decrease of 10%, 20%. So 4,000 minus decrease at the rate of 20%. Decrease at the rate of 20%. 800. So 3,200 in outer column. Then goodwill. Goodwill, it is 6,000. Creditors, how much? 20,000. 20,000. Then bills payable. Bills payable, how much? 4,000. 4,000. 4,000. Then capitals. Under that, Ganga, Yamuna and Kaveri. Are there any other liabilities? No. That's all right. 39,000. It is capital balances. 26,000 and 26,000 and 13,000. So total it will be 78,000. Total capital. Yes, that's all. See whether it agrees or not. It must agree. 1,02,000 is the total. 1,02,000. So this is how you have to solve a problem whenever you get a problem of adjustment of capitals. Adjustment of capitals. So on the basis of the share of new partner, you have to calculate the total capital of the firm, and they will give the new profit sharing ratio, and according to that calculate how much capital of each partner should be there in the new firm. Then write it as to balance carried down, write it first, then balance the account. Wherever there is excess or shortage, on the shortage side write by cash or to cash or by bank or to bank, as the case may be. If cash is there, cash, otherwise bank, cash at bank is there, cash is not there at all, then to bank or by bank. Excess or deficit, remember, this is how you have to solve a problem. Now assignment, just just solve this problem itself. Ganga and Yamuna, solve this problem and submit on time. Thank you for watching this video.